Have you ever wondered what makes a neighborhood turn from just another part of the city to the next real estate goldmine? Or how technology like blockchain could transform the way we buy homes? Imagine a crystal ball that reveals the pulse of the market, the rise of neighborhoods, and the tech set to disrupt the status quo of buying homes. In real estate, foresight is your greatest asset. Welcome to episode 11 of the Under the Radar Real Estate Podcast. We'll dissect the surprising dynamics that could make 2024 the year of the unexpected frontrunner in the real estate race, spotlight the resurgence of first-time buyers, and decode how blockchain technology is redefining real estate transactions. Let's start with a snapshot of the present, or rather, the very recent past. December 2023 has just closed off, and the numbers? They're speaking volumes. Sales have dropped by 12.1% from the previous year. But what does this really tell us? Are we looking at a warning sign? Or is it an invitation for the cunning to capitalize? Let's understand the factors at play. So let's jump right into the numbers. All right, so sales trends. Sales from last year, let's look at the full year. We ended the year with 65,982 sales in all of the Toronto Regional Real Estate Board, which represents a 12.1% drop from 2022 to 2023. Now, when we look at December specifically, we saw about a 6.6% decrease in the amount of new listings, which is good. I mean, we'd like to see some of those new listings come down, and that's because we saw a 19.3% increase in the amount of active listings on the market, which is a very significant increase in the amount of listings that are just simply sitting on the market. When we move on to pricing, we saw about a 3.2% average price increase over the previous year. Now, I mean, that's an interesting stat when we look at year over year. However, if we remember some of the market updates from 2023, we saw prices as high as 1.2 million back in May, whereas right now the average is sitting at $1,084,000 as it stands right now. Early January, so to end December, we were at $1,084,000. When we look at the composite numbers, the average in the city of Toronto specifically, we're sitting at about $1,053,000, which is pretty much flat for last year. So the composite numbers, which are a bit more smoothed out, a bit more accurate, remove some of the highs and lows, we are sitting pretty much flat, bang on with December of 2022. Now, as we sift through the sales trends, new listings, and inventory, we'll stumble upon a curious pattern. And I promise by the time we connect these dots, you'll see exactly why this isn't just data, it's a blueprint for the future. But before we reveal what this means for the market, let's take a look at the significance behind the months of inventory and how it shapes a narrative for buyers and sellers. We talk about months of inventory on this channel a ton, as it's one of the leading indicators that tells us whether we are either in a seller's or a buyer's market. Along with the months of inventory, we'll also get into sales through listings ratios, which is another one of the advanced metrics that we love to look at on this channel that gives us a temperature and a gauge of where the market's at. So right now for months of inventory, in the city of Toronto, we are sitting at about 2.7 months. And if you watch this channel, you know that 2.5 months, so 2.5, is kind of the bellwether of whether we're in a balanced market. So right now we were still trending slightly above that 2.5%, which means we're still in a buyer's market in the city of Toronto when we look at months of inventory. If we go into the different Toronto neighborhoods, out in the East End, they're sitting at 1.8. So they're actually a bit more towards a seller's market in terms of the amount of inventory and houses they have on the market. When we look at the West End, we're bang on at 2.5%, so fairly balanced market in the West End. And I mean, I do a lot of my business in the West End. I also do a little bit out East, but I can tell you very much that both in the West and the East End, things feel relatively balanced. However, when we get to the central areas of Toronto, we are sitting at 3.3 months of inventory. Now, the biggest driver behind that 3.3 months is condo inventory. We are sitting on a ton of condos sitting on the market, and that's driving up the months of inventory. There is a ton of supply, not a ton of buyers, so we're firmly in a buyer's market for condos here in the city of Toronto. Now, when we compare those numbers to sales to new listings ratio, which is another one of the advanced metrics that give us really good temperature of the market, a balanced market for sales to new listings ratio is about 50%. So 50% of new listings that hit the market are going to sell within that given period of time. So when we look at the actual numbers, in the city of Toronto, we were sitting at about 45% of sales to new listings ratio. Out of the East End, sitting at 52%. So the months of inventory and sales to listings ratio are showing slightly tighter market conditions out in the East End. So not a lot of inventory, and there still seems to be quite a few buyers looking in the East End of the city. When we look in the West End, we're sitting at about 47%. So still tilting towards buyer's market territory. Also, one thing to keep in mind is that there's quite a few more condominiums in the West End, especially when we look at some of the neighborhoods south of the Gardner Expressway, along the lakeshore. A lot of condo product that is affecting those numbers a little bit. So I'd say overall, for housing product in the East and West End, we're still in balanced market territory, maybe slightly tilting towards sellers. However, when we look at the central market, there are the central areas of Toronto, we were sitting at 41% for sales to new listings ratio, which is firmly again in buyer's market territory. And when we look at some of the other stats in the city of Toronto, how many actual listings are we sitting on right now in the city of Toronto? Well, that number by the end of December was at 4,410 listings currently sitting on the market. So it's very clear that there's a lot of inventory and not a lot of buyers, and it's really affecting some of the market dynamics in the city. Some of the other economic indicators that we can look at that'll dictate where we see things moving now into 2024 is interest rates. So last time we saw interest rates this high at the beginning of the year, the average price in the city of Toronto was well below $400,000. So it's going to be interesting to see what the central bank does, how the bond markets react to our current economic crisis that we're in, and see if rates will push down lower. Because the only way that housing is going to become more affordable, barring an epic collapse where prices drop another 50-60% more, is for rates to drop. Because ultimately, people buy real estate based on what they can afford on a monthly basis. No one has the cash, or very few people have cash in the bank to purchase real estate. So it's really going to depend on rates at this point to determine where things go in 2024. Watch till the end of the podcast, because then I'll get into some of my predictions on where I think things are headed in 2024. Now hold that thought as we pivot to the under-the-radar neighborhoods, the CO3, W03, and W04. Each tells a story, and not just through their benchmark prices or year-over-year changes. There's a subtext here, a hidden dialogue between the streets of these communities along Eglinton West and up into Weston, and the pulse of the overall city. What makes CO3 command its price point, and why might W03 be the dark horse to bet on? Let's explore. Let's first get into the numbers in CO3. So CO3 is kind of centered around Oakwood Village. So the benchmark price in that area is just under 1.6 million at 1.588 million, which is a year-over-year change of just over 5%. When we look into W03 and W04, on the other hand, it shows us a bit of a different type of growth. They're the climbers, they're the strivers, with benchmark prices well below the city average, yet on an upward trajectory. These neighborhoods, W03 being your Eglinton West and stretching down into the Upper Junction and your St. Clair West. W03 looking at a benchmark price of just under $954,000, with year-over-year price change moving up 3.65% year-over-year. When we look at W04 being Weston and Mount Dennis, so kind of the end of Eglinton West, stretching up Weston Road towards the 401. The benchmark price in that neighborhood is just under $900,000 at $893,400 with a year-over-year change of 2.42%. So as we dissect these areas, keep one question in mind. What sets apart a neighborhood that merely grows from one that explodes in demand? We'll uncover that secret in just a moment. But first, let's take a quick dive into the comparative analysis because we got to understand the baseline because it's key to spot why these neighborhoods might be an outlier. So let's first start off with CO3. So CO3, as I mentioned, it is Oakwood Village, situated just west of Allen Road. The prices in this neighborhood, obviously, they're quite a bit above the overall city average, reflecting a higher value market, and it's showing quite strong year-over-year growth. Now, some of that is likely due to the neighboring communities of Wychwood, Forest Hill, which sees average pricing in and around the $2 million mark, in many cases quite above that $2 million. So what we're likely seeing here are people who are looking in some of these neighboring communities, moving a little bit further west into Oakwood Village and finding very similar type of housing product for much lower rates. So while it's above the overall city average, we are looking at generally higher net worth buyers moving away from some of the traditional high net worth neighborhoods and moving further west into Oakwood Village because they're offering a lot of the same neighborhood amenities that they are asking for or looking for, and at a much lower price point. Now, W3 and W4 both have benchmark prices well below the City of Toronto average, but have shown tons of positive growth over the year, indicating pretty healthy demand and potential for investment opportunities. So the main driver in W03 and W04, again, Eglinton West stretching up into Weston, why we are seeing tons of value here, why we're seeing a lot of first-time buyers and investors look here, is transit. Transit is the number one driver in these neighborhoods that's influencing buying decisions. As we all know, the Eglinton Crossend LRT will hopefully open and be operational at some point in the near future, and buyers are making huge bets on this revitalizing the neighborhood. We're already seeing the early signs of massive redevelopment in both of these areas, in Eglinton West and up into Weston, with well over 15,000, actually when you combine both neighborhoods, over 20,000 new dwellings proposed and planned in the area, set to start construction very soon. Clearly the big money has already placed their bets there, have invested huge into the redevelopment of these neighborhoods, and then we're seeing now a lot of the first-time buyers and investors follow that money into these neighborhoods and looking for those gains. Because if you're a first-time buyer, you're looking for appreciation because this purchase that you're making may not be your final purchase as a real estate buyer. So you're looking for those opportunities where you can build equity to move on to your next property. And for investors, it's very simple. You're looking for return on your investment. And rents in these neighborhoods follow the city average. Prices are well below the city average. So you're actually seeing better yields, better returns on your money in W03 and W04. But then just when you think you have a handle on the market, we're going to throw you a curveball. The first-time buyers and how they're about to take center stage in 2024. We just talked about them. We're going to talk about them a little bit more. But what's pushing them into the spotlight beyond just some of these desirable and up-and-coming neighborhoods? Is it just the potential dip in mortgage rates? Or is there something more? Well, as discussed a few moments ago, it's likely mostly mortgage rates, because as we mentioned earlier in this podcast, quite often buying decisions are based upon what your monthly payment is going to be. So first-time buyers for the last 18 months have really been sitting on the sidelines, pushed to the sidelines due to the rising rates. If you're currently renting, rents, while they are increasing, if you are currently in a rental, especially if your rental was built prior to 2018, your landlord could only raise your rent at a dictated rate, which was, right now the highest is 2.5%. So you weren't seeing rental growth at the same rate that we were seeing your monthly payment on a purchase grow over the last 18 months. So things have gotten extremely expensive. Now, we're starting to see a reversal of that with rates starting to come down. We're starting to see rates that start with a number 4 in front of it, whereas just 2-3 months ago, you couldn't find rates below 6. I mean, at some point, 5-year fixed rates were approaching 7%. So with the news of mortgage rates starting to come down into the 5s and likely into the 4s and perhaps into the mid to low 4s by the end of the year, I'm predicting that we are going to see a return of the first-time buyer to the market. Now, great news for first-time buyers. We are sitting on a ton of inventory currently in the city of Toronto, especially if you're looking for condominiums in the city of Toronto. There are a ton of condos on offer, so you have your choice. You have all the leverage in negotiations, so this will be your year where you can kind of score something at a decent price with rates going down. So it could create the perfect storm for first-time buyers, and it's largely going to be driven by the rate environment. That's what's really going to likely drive our market in 2024. Now, I'm going to make a bit of a pivot because another thing I see in 2024 is a piece of technology that's going to revitalize real estate. Have you heard of PropyKeys? If not, you want to listen closely. We're not just talking about property investment anymore. We're talking about property on the blockchain. Imagine trading real-world addresses like digital tokens. I know it seems far-fetched, but not anymore. Let's dive into just how this technology is currently redefining and could also further redefine the very fabric of buying and selling homes. So let's talk firstly about land title NFTs. It's a recent development by Propy. It allows users to mint and trade real-world addresses on the blockchain using their PropyKeys app, which is a special app they created. Imagine having a digital deed for your property represented as a non-fungible token or an NFT. This isn't science fiction at all. It's happening right now, and it's probably going to change how we think about property ownership and transfer. Each NFT is unique, securely tied to a specific property, and holds the history and details of that property. But what does this mean for buyers, sellers, and even real estate professionals? For one, it could significantly reduce the time and complexity of transactions. It's about more than convenience. It's about security and transparency. With blockchain, the history of a property, including previous transactions, is immutable. Immutable means it can't be changed. And it's also easily verifiable. No more digging through dusty records or fearing forgeries and people kind of doing weird things with your title. Now, when we look on a broader scale, organizations are now recognizing the potential of blockchain as well. So right here in Toronto, the Toronto Regional Real Estate Board is also pioneering a blockchain-based infrastructure through its PropTX platform. What's their goal? Well, it's to streamline the transaction process, enhance data security, and provide a more streamlined and trustworthy system for managing transactions. That's obviously off their website. This can mean, faster closings, fewer errors, a new level of confidence in the market's integrity, also just kind of make our lives as agents a whole lot easier. The implications, though, here are quite vast. We're looking at potentially reduced costs for transactions, enhanced privacy for all parties involved, and a new area of trust in a market that, let's face it, has its share of trust issues. But what does this all mean for the future? Could we see a day where physical title deeds are a thing of the past, replaced entirely by digital NFTs? I know it seems crazy, but as these technologies become more mainstream, how will they impact the market dynamics? Could we see a more fluid, dynamic market as a result? Consider this. Blockchain could also democratize real estate investments, allowing more people to participate in the market through fractional ownership, represented by tokens. The possibilities are as exciting as they are vast. So, as we stand on the brink of these groundbreaking changes, a lot of them already in play. TRREB has a lot of these things already either installed or on the way. I'd love to hear your thoughts. Are you ready to trade your property on the blockchain? Do you see this as the future of real estate, or are these hurdles you think need addressing first? Share your opinions, questions, or experiences with blockchain and real estate. I'd love to hear if you guys have encountered any of this already. If you've already traded with Propy, for example, I'd love to hear it. Your insights can help shape our understanding of this evolving landscape and might be featured in our next discussion. We're likely going to be talking about blockchain and real estate quite a bit more in 2024. We touched on it last year in some of our podcasts, but I think we're going to be talking about it quite a bit more on this podcast, so keep watching for that. All right, so you want to hear my predictions for 2024? Here it is. So where I think we're at right now in our current inventory levels, and based on some of the advanced metrics like months of inventory and sales to listings ratio, I think in 2024 we aren't necessarily going to see a massive explosion in pricing. We have a ton of inventory on the market, and I know from 2021 to 2022, we saw an increase in the spring, and then again from 2022 to 2023. This past year, 2023, we saw a massive explosion in pricing when it came to the spring market. But these were markets that weren't well supplied. We didn't have the inventory levels that we have today. Based on our current inventory levels, I can't see a massive jump in pricing overnight. Could it happen in the future? More than likely. We are still in a market that isn't well supplied overall for housing. So 2025, 2026, unless if we start building more homes, we're putting ourselves in trouble. As rates come down, prices will inevitably have to move upwards because there just simply aren't enough homes for the amount of people that live here. But when we go back to just 2024, I think we're in a perfect zone for first-time buyers or some select move-up buyers to take advantage of this market, where prices are likely going to stay either stagnant for most of this year. Perhaps they can move downwards a little further. I don't necessarily see it here in the city of Toronto. I think what we're likely going to see is very stagnant pricing for the next 6 to 8 months. Unless if rates drop overnight drastically, we're talking 2 to 3 points overnight, we are unlikely to see price action move upwards anytime soon. But it's going to be very welcome to see rates start to come down, and I think we're going to see rates by the end of the year back into the mid to low 4s. Perhaps even by the fall, we may see a couple of banks kind of tease some high 3s on very select products. And 2024 will be the year of the under the radar neighborhood. So keep watching this channel. We're going to keep you updated every month on where things stand in our 3 key under the radar neighborhoods. So today we've navigated through the potential real estate hotspots of 2024. We've decoded some of the market trends and unveiled how technology like blockchain is set to revolutionize the way we think about property. From the hidden gems in under the radar neighborhoods to the strategies that will empower first-time buyers, I think we've covered a lot of the terrain of what the future may hold. So as we move into 2024, these insights aren't just numbers and predictions. They're the knowledge you need to make informed decisions. Whether you're buying your first home, investing in properties, or simply keeping an eye on the market. Did any of these areas we discussed today catch your interest? Or maybe you have a prediction of your own for 2024's real estate market? Join the conversation by commenting on this episode or reach out to us. We're on Instagram at Real Estate Under the Radar. Your insights obviously help enrich our community, and like I mentioned a couple seconds ago, might be featured on our next episode. We like to call people out for both the positive and negative comments, so comment away. Don't miss out on the future insights and deep dives into the real estate world, so make sure you follow, subscribe to Under the Radar Real Estate Podcast wherever you listen. I mean, we're right now just on YouTube. Hopefully, finally this year, we're going to get onto the other platforms. Stay ahead of the curve as we continue to uncover the trends, strategies, and stories that will shape our market. Also, if you know someone who's eyeing the 2024 real estate market or could benefit from our discussion, please share this episode with them. Each share helps us reach and educate more individuals. We're all about education of our clients, and we're not here to be pushy salespeople. We want our people to be making smarter decisions, and we also want to build a stronger community. So that's it. That's it for today's show. One thing we always like to say is that we like to remind our people that in real estate, as in life, the next big thing might just be where you least expect it. Peace out.